Good evening. In the next 15 to 25 minutes, we are going through an in-depth, professional analysis of the Indian markets based on the fully completed trading session of 18th December 2025. We'll break down the key index behavior, sector dynamics, institutional flows, technical context, options positioning language, and the psychology underpinning it all, and we'll frame what really matters for tomorrow's opening direction. Here's the opening narrative. The Nifty 50 closed very mildly negative around 25,815.55, barely down but still under pressure after multiple sessions without clear directional conviction. The Nifty Bank Index was also soft, around 58,912, showing caution among financials. NSE India. This tells us one thing early: the market didn't break sharply lower, but also failed to rally freely. That's compression. And compression in markets usually precedes a breakout with conviction only after confirmation. So, as we analyze everything that follows, remember this. The first 15 minutes tomorrow, Friday, decide direction. Daily price action without clear resolve is not randomness, it's a market asking for confirmation, not predictions. Global markets continue to play a significant role in shaping Indian market direction. On 18th December. Globe showing Americas, US and Europe. Major US indices remained under pressure during the week as interest rate expectations fluctuate and economic data remain mixed. This matters because India's market rhythm often reflects US risk sentiment, especially in late Asia session futures and GIFT Nifty signals. Globe with Asia, Australia, Asia. Asia markets showed mixed behavior, some indices weak, some stabilizing. This kind of indecision in Asia usually translates into Indian benchmarks trading in narrow ranges early, with sharp adjustments only after global cues filter through. Fuel pump commodities and FX. Crude oil price volatility persists and the Indian rupee is seeing sensitivity to both global and domestic flows, influencing financial conditions, energy stocks, and importer-exporter performance. Why this matters? India doesn't trade in isolation. When global risk appetite wanes, foreign institutional investors become defensive, and today we saw continuation of that cautious theme. Market moves without strong global confirmation tend to be range-bound and reactive, not trend-driven. Nifty 50. The Nifty 50 closed slightly below its previous session's levels, 25,815.55, down marginally. That tells us bulls were not aggressive, but neither were bears decisive. NSE India. This kind of close is not outright bearish, it's neutral to cautious, often a sign of mixed positioning and balance between buyers and sellers. Nifty Bank. Bank Nifty also finished mildly lower, options suggest slight defense by call writers and cautious put side activity. NSE India. Banks are important because they reflect credit growth expectations. They're sensitive to policy and rate shifts. They often lead or lag broader markets. In this session, financials were not strong enough to drive a breakout, reflecting hesitation amid mixed macro flows. Sector action highlights the rotation and defensive positioning. Relative strength observed. IT and financial names provided cushioning to the indices at various points in the session. The Economic Times. Weakness across other pockets. Defensive consumer and cyclical sectors saw more pressure, indicating profit booking or risk avoidance. Better performances there tend to indicate rotational caution rather than outright trend change. This sector behavior feeds into broader psychology, that participants are waiting for clear triggers before committing capital. Based on the closed session. Top gainers. Hindalco, Eicher Motors, Shriram Finance, SBI were among the notable gainers. Enrich Money. These names typically attract flows when markets remain choppy because traders consider them high beta or liquidity favorite names. Top losers. Max Healthcare, SBI Life Insurance, HDFC Life, Apollo Hospitals were among the laggards. Enrich Money. Losses in defensive sectors or insurance stocks suggest profit-taking and rotation toward names with short-term tactical interest. Institutional flow data lags by a day or two, but market behavior suggests foreign institutional investors, FIIs, remained cautious or on the sidelines, with limited directional conviction. When FIIs are not strongly participating, markets tend to depend on local flows, short-term traders, and short covering, all leading to range-based price action until a clear trigger arrives. Nifty. The index is structurally in a narrow range, showing lower highs and near-flat lows recently. This indicates consolidation, not breakdown. BankNifty shows a similar pattern, lack of strong directional candles and low momentum. Technically, until Nifty convincingly holds above recent resistance or below recent support, trades will remain in a serialize of short-term ranges with episodic spikes on triggers. In terms of options narrative, call writers are neutralizing upside near resistance levels. Put writers are being tested around support zones. When call writers defend ceilings and put writers protect floors, price compression increases, which is exactly what we saw today. This language suggests no clear trend buyers, just a tug-of-war. The Bank Nifty option structure echoes the broader index, slight positioning near key strikes, meaning a range break in either direction will likely accelerate gamma-driven volatility. Until then, the market is guarding its range. The emotional context in the market today was one of cautious equilibrium. Investors didn't sell off aggressively. They didn't buy into strength either. Participation remained selective, visible in sector rotation. This kind of psychology often precedes a volatility burst, when participants finally choose a side, either supporting higher prices or capitulating lower. Today's market was influenced by mixed global sentiment without a conclusive driver. Rupee and commodity price sensitivity. Institutional caution ahead of macro data and policy expectations. These headline themes dominated trade, not granular stock-specific catalysts. For Friday, 19th December 2025, the setup is clear. Bullish scenario, immediate break above recent resistance with strong volume. Bearish scenario, failure to hold current support with follow-through selling. Instead of predicting, we emphasize confirmation. The first 15 minutes of trade will reveal which camp, buyers or sellers, is decisive. Observe price behavior around these levels. Current intraday pivot bands. Sector rotation cues in financials and IT. Volume spikes indicating participation shift. Option expiration pressure zones. Understanding compression before breakouts. When markets compress, price ranges tighten. Option positioning becomes balanced. Volume decreases. This does not mean no move, it often means a bigger move is being set up. So the lesson, compression is not calm, it's preparation. Today's session closed with indecision and range compression. Global markets remain mixed and cautious. Sector activity was selective, not broad-based. Option positioning reflects a balanced tug-of-war. Domestic psychology shows preparation, not resolve. For Friday, 19th December 2025. Watch the first 15 minutes, that's how trends unfold. Don't predict, confirm.